According to data from the International Monetary Fund, IMF, Germany's GDP exceeded that of Japan in 2023. In terms of US dollars, Germany's GDP in 2023 increased by approximately 8.4% compared to 2022, reaching a total of about $4.43 trillion. Meanwhile, Japan's GDP in 2023 is estimated to be around $4.23 trillion, showing a decrease of 0.2% compared to 2022. The Japanese newspaper Daily News commented that Japan is undergoing prolonged economic low growth. In 1968, Japan surpassed West Germany, then known as the Federal Republic of Germany, to become the world's second largest economy, and held this position steadily until it was overtaken by China in 2010. After several decades, Japan has now been surpassed by Germany. Economist Tomohisa Ishikawa from the Japan Research Institute expressed his thoughts on social media, stating that, to some extent, Japan being surpassed by Germany was foreseeable given the situation of low economic growth and a weakened yen. However, when this day actually arrived, it was still saddening. Analysis by Kyodo News suggests that the depreciation of the yen is a major reason for Japan's nominal GDP being surpassed by Germany this year. The exchange rate of the yen against the euro hovers around the 160 level, and the last time the euro-yen exchange rate touched this level was in August 2008. The yen-dollar exchange rate is approaching a 33-year low. In addition, inflation rates also impact nominal GDP. Real GDP growth rate is nominal GDP growth rate minus inflation rate. Daily News reported that looking at the monthly inflation rate, the Consumer Price Index in Japan generally rose by about 3% year-on-year in 2023. However, Germany had an initial increase of about 9%, gradually slowing down and reaching around 4% in September. Data shows that Germany's inflation rate in 2023 reached a high of 6%. GDP, or gross domestic product, is a key indicator for measuring the overall size and vitality of a country's economy. GDP includes the total value of all final goods and services produced by enterprises, households, and the government within a country. These products and services are valued at market prices, determining their contribution to GDP. Comparatively, Germany's GDP is primarily supported by consumption, which constitutes about 40% of Germany's total GDP. Therefore, due to the impact of inflation, Germany's GDP has seen a significant boost when measured in US dollars. This is a crucial reason why Germany's nominal GDP has surpassed that of Japan. Nikkei Economic News states that the IMF's economic outlook for Japan and Germany reflects Japan's long-term economic stagnation. In the past 30 years, Japan's GDP has barely grown, while Germany's has more than doubled. In 1993, Japan's economy was larger than it is now, at about $4.54 trillion, ranking as the world's second largest. At that time, Japan's economy was 2.2 times the size of Germany's. Looking at the data, Japan's ranking is likely to continue to decline in the future. According to the IMF's forecast, India will become the world's fourth largest economy in 2026, and Japan is expected to slide to the fifth position between 2026 and 2028. In recent years, Germany and Japan have shown different economic trends. Germany has made breakthroughs in innovation and technology in key sectors, driving its economic growth. Meanwhile, Japan, although still leading in the technology sector, has been affected by internal and external factors, resulting in relatively slow growth. The background of Germany surpassing Japan in GDP has become a widely discussed economic news. Germany, as one of the largest economies in Europe, has been renowned for its strong manufacturing sector and export-oriented economy. Germany's manufacturing success spans sectors like automotive, mechanical engineering, and chemicals. Additionally, Germany plays a crucial role in international trade, with its exports serving as a significant engine for economic growth. Germany has consistently been at the forefront of technology and innovation. Continuous investments in research and innovation have enabled German companies to introduce high-quality, high-value-added products enhancing their global market position. Technological innovation not only influences the manufacturing sector, but also propels diversification in areas like digitization and green technology. Germany boasts highly skilled labor, and its labor market possesses flexibility, allowing businesses to adapt better to market demands. The well-established system of vocational training and education contributes to a highly skilled workforce, bolstering Germany's labor competitiveness. The industrial policy of Germany encourages companies to invest in research and innovation, driving continuous upgrades in industrial structure. A robust legal system and sound economic institutions provide a reliable operating environment for businesses, attracting both domestic and foreign investments. In contrast, Japan, as an economic powerhouse in Asia, has represented technological innovation and highly developed manufacturing for decades. However, Japan has faced economic challenges in recent years, including population aging and insufficient domestic demand. Population aging is a significant issue in Japan, leading to a shortage of labor supply, impacting productivity and economic growth. The highly aged social structure also increases the burden on social security, putting pressure on public finances. Japan has grappled with insufficient domestic demand for an extended period, partly due to inadequate wage growth and weak consumer confidence. This places significant competitive pressure on businesses in the domestic market, making robust economic growth challenging to achieve. Japan has traditionally relied on exports, but uncertainties in the global trade environment have posed challenges to Japanese exports. Global trade tensions and adjustments to international trade agreements have influenced Japan's trade prospects. Germany's relative advantage in the global economy can be attributed to its strong manufacturing sector, export-oriented economic model, and sustained investments in innovation and technology. Meanwhile, Japan faces challenges such as population aging and insufficient domestic demand, despite making progress in digitization and innovation. If you enjoyed this video, please like and subscribe to our channel for more exciting content. Thank you for watching.